Let's talk about the final boss of personal finance, investing. For most people, this word brings up images of complicated charts, risky bets, and the fear of losing everything. It feels like a members-only club, and you weren't given an invitation. But what if I told you the biggest financial risk you can take is not investing at all? The real enemy isn't the market, it's the myths. The 5 big lies we've been told that keep us on the sidelines while others build wealth. Today, we are Mythbusters.
Welcome back to Modern Financial Habits. For the next few minutes, we're going to make investing simple. Forget the confusing jargon. Forget the complex strategies you see in movies. This video is about breaking down the 5 biggest mental roadblocks that prevent smart people, just like you, from starting their wealth-building journey. And why is this so critical? Because building true, long-term wealth isn't about saving your way to $1 million. It's about putting your money to work for you. These myths are the chains holding your money back. We'll cover everything from risk to how much money you really need to get started. And you'll definitely want to hear our takedown of myth number 1. It's the most common lie in all of finance, and believing it has likely already cost you thousands of dollars.
All right, let's start with the biggest, most damaging myth of all. Myth number 1. You need to be rich to invest. We see this lie everywhere, especially in movies. Wealthy characters in expensive suits making million-dollar trades. So we tell ourselves, I'll start investing when I have thousands of dollars saved up. And so we wait. This is, without a doubt, the most expensive lie in personal finance. Why? Because it completely ignores the single most powerful force in building wealth: compound interest. The amount of time your money is invested is infinitely more important than the amount of money you start with. And here's the good news. Technology has completely changed the game. Today, you can open an investment account online in under 10 minutes with no minimum deposit. You can even buy a fractional share of your favorite company for as little as $1. The barrier to entry is no longer money, it's knowledge. The modern financial habit here is to change the question from how much money do I need to start to what can I start with right now? The answer is probably $20, $50, maybe $100 a month, and that is more than enough. Because the goal in your first year isn't to get rich, it's to build the habit, to get your money in the game so that time can start working its magic for you. Okay, so you're convinced you can start with a small amount, but then the second fear shows up, the one that keeps millions of people out of the market. Myth number 2. Investing in the stock market is just gambling. You put your money in, cross your fingers, and hope you don't lose it all. It feels like walking into a casino. But here's the truth. Gambling and investing are not even in the same universe. Gambling is betting on a random outcome that creates zero value. The odds are stacked against you. Investing, when done properly, is the opposite. You're not spinning a roulette wheel. You're buying tiny pieces of real, productive businesses. Companies that build things, provide services, and generate profits every single day. You're betting on human progress itself. Yes, some people treat the stock market like a casino. Day traders chasing quick wins and the next big stock. That's speculation. That's gambling. But that's not what we do. The modern financial habit is simple. Don't waste your energy searching for that one golden needle in a haystack. Just buy the entire haystack. With a low-cost index fund or ETF,
you instantly own hundreds of the world's strongest companies. Some will rise, some will fall. But together, over time, the entire haystack keeps growing. And historically, it always has.
Okay, so you're ready to start small, and you understand you're not gambling by buying the whole market. But then, the next wall of insecurity appears. Myth number 3. To succeed, you have to be an expert who can pick the next Apple or Tesla. The media glorifies these stock-picking geniuses, making us feel like if we can't analyze complex charts and predict future trends, we shouldn't even try. It feels like you need a PhD in finance just to have a chance. But here's the data-driven truth, and it's liberating. Over almost any 10-year period, more than 85% of professional, full-time fund managers, people whose entire job is to pick stocks, fail to beat a simple, boring market index fund. Let me repeat that. The highly paid experts, with all their teams and algorithms, consistently fail to beat the average. And this is fantastic news. It means you don't have to be a genius. You just have to be smart enough not to play a game that even the pros are designed to lose. The modern financial habit is to embrace the beautiful simplicity of passive investing. You accept that you cannot predict the future, so instead, you bet on overall human progress by buying the whole market. The goal is not to beat the market. The goal is to be the market. And the great news is that's easier, cheaper, and historically more profitable than trying to be a stock-picking hero. Okay, so you don't need to pick the right company. But what about picking the right time? This leads us to the paralysis of myth number 4. You have to be a genius who can time the market, buy low and sell high to be successful. We hear this everywhere, especially on the news. The market is at an all-time high. Is it too late to buy? Or a crash is coming. Should I sell everything? This noise creates a constant state of panic and prevents us from ever taking action because it never feels like the perfect moment. Let me be clear. Nobody can consistently predict the stock market's short-term movements. Nobody. Studies have shown that if you miss just the 10 best days in the stock market over the last 20 years, your total returns would be cut in half. The cost of being out of the market, waiting for that so-called perfect moment, is far greater than the risk of being in the market during a downturn. The modern financial habit that destroys this myth is called dollar-cost averaging. It's beautifully simple. You invest the same amount of money, say $100, every single month on the same day, no matter what the market is doing. When the market is high, your $100 buys you fewer shares. When the market is down, that same $100 automatically buys you more shares at a discount. You're not being a psychic, you're just being consistent. It's all about time in the market, not timing the market. Okay, we've busted the big strategic myths, but there's one final practical barrier that stops most people in their tracks. Myth number 5. Investing is too complicated to actually get started. You hear words like brokerage account, ETFs, Roth IRA, and it sounds like you're trying to learn a new language. The process itself feels overwhelming, so you tell yourself you'll figure it out later. Decades ago, this was true. But today, thanks to technology, I'm going to prove to you that investing is literally easier than ordering a pizza online. Think about it. To order a pizza, you choose a company, like Domino's. You open an account with your info. You connect your bank account, and you choose what you want from the menu. Investing is the exact same 4 steps. Step 1, you choose a brokerage. That's just a company like Fidelity, Vanguard, or Schwab. It's the Domino's of the investing world. Step 2, you open an account online in 10 minutes. Step 3, you connect your bank and transfer money in. Step 4, you place your order.
And instead of a pepperoni pizza, you buy a low-cost index fund ETF like VTI. That's like ordering the everything pizza. You get a tiny piece of the entire US stock market in one click. That's it. You are an investor. The process is no longer a barrier. The only thing standing in your way is the decision to start.
So there you have it. The 5 biggest myths that stand between you and a future of wealth are just that, myths. They're stories built on fear and outdated information that keep us on the sidelines. But now you know the truth. You know you don't need a lot of money, just a lot of time. You know you're not gambling, you're owning a piece of global progress. You know you don't have to be a genius stock picker, and you don't have to predict the future. And you know the process itself is simpler than ever before. The wall of fear that surrounds investing is made of paper. The only thing holding you back now is that first step. So here is your challenge for this week. Open an investment account. You don't even have to fund it yet. Just go through the 10-minute process of opening the account. Take that first powerful step and prove to yourself that you can do this. What was the biggest myth that was holding you back? Share it in the comments below so we can all see we're not alone in these fears. If this video helped you break through a barrier, please subscribe and join us. And now that you're ready to invest, what's next? It's time to put your money to work. Click here to watch the final video in our series, Top 5 Passive Income Ideas for Beginners.